please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning. This is Chart Busters, a show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks. Yesterday, we were talking about a 100-point rally, and it's acting like Virat Kohli hit a century first, and from the lows, the Nifty has gained 200 points. As we speak, 10,250 in the throes of that 20-day moving average. Let's see what happens. The bulls believe they can defend the 10,200 mark for sure, because the kind of put writing that we've seen in the first half of trade itself, first hour of trade itself, the 10,200 put, that one is something which is something I'll keep an eye out on. And conversely, the 10,300 call, that one's still seeing some sort of writing. So let's see whether the bears believe they can defend or not. 50 points on either side. Let's see what happens. Hi, Surbhi.
Hi, Manglam. Yes, and once again, what stands out for me is that it's such a broad-based rally. This is not about a select section of stocks that's moving higher. It's pretty much all parts of the market powering ahead on the large cap space. Maybe barring a Reliance, most of the other elements, whether it's banks, whether it's metal stocks, it's really falling in place today. And of course, if you're looking at the mid-cap universe, and there are lots of high flyers, big stocks moving, we will cover a lot of them, some of the future group stocks which are on the higher side as well. So we have a lot of ground to cover. I suppose we can straight away get started with some calls on the market. We've got Ashwani joining in for the same. So Ashwani, still going strong. What are the next levels that you're working with now? And, you know, is there still a buy trade open on the index as of now, if someone didn't go long immediately in the morning?
See, I think financials have come back very strongly. So I think today HDFC Bank and ICICI Bank are both firing. So probably the bank Nifty still has more upside. Even on the Nifty, just the second day, second morning. So even now you can buy. I think several large caps still to participate strongly. I think SBI will probably at some point pick up. So that way, given that global markets are also kind of recovering, so metals and IT are also participating. So overall, I would think that the financials should reassume the leadership and take this market higher. So use all these minor declines to buy into the market. It's corrected to its 50-day moving average, which is held. That just means that the trend is still intact, and we should get at least to the higher end of the range, which is about 10,400. As far as individual stocks are concerned, HUL is a buy with a stop of 1280, target of 1340. BPCL is a buy with a stop of 500, target of 525. And MOIL is a buy with a stop of 222, target of 238.
Right, Ashwani, a word on Bombay dying. Real estate stocks have been picking up over the last couple of weeks, and Bombay dying suddenly seen a huge spike of 10%, and with volumes of what, 64 lakh shares which have suddenly traded. A technical call on that?
See, textile, the better stocks are Arvind, Raymond, etc. But generally it's a budgety type of stock. So maybe budget expectations, etc. are now coming in. Once we get past this 240 zone, I think you should get maybe closer to 300. I think this is a fresh move. So people can buy with a stop, say, closer to 200.
Okay, all right, Ashwani, thanks so much for those trading ideas. We will keep coming back to you. Right now, it's time for a CNBC TV18 exclusive. Banking sources are telling us that big three telecom companies have bid for the assets of Reliance Communications. Nisha Podar is getting us those exclusive details. Nisha, so what's going on? It seems that banks no longer willing to wait and watch.
It's a large transaction, and sources with direct knowledge share that lenders have just concluded the first round of bidding process for selling the assets of Reliance Communications. And sources with direct knowledge share that the large telecom companies of the country, Bharti Airtel, Reliance Jio, as well as Idea and Vodafone India put together, have really submitted their bids. Now remember that this is going to be a different kind of sale altogether, because Reliance Communications' entire company is not something that any of these telecom operators really want. What is really going to happen is a piecemeal asset sale approach for Reliance Communications, and we do gather that each of the three companies, the entities who have bid aggressively, like Bharti Airtel, Reliance Jio and Idea Vodafone India, have really made their own choice and bouquet of assets that they want to buy. What's up for sale is not just the spectrum of Reliance Communications, but also the enterprise business, the optical fiber business, and even the tower assets. So it needs to be now seen and evaluated evaluated and assessed by the lenders, and how much of recovery can they do out of the 44,000 crore rupees of debt that is sitting on Reliance Communications books. And lenders' main purpose is to recover as much as possible by the asset sale of the company.
Lots of stocks on the move, as we've been telling you. Some examples that are popping up on the screen. So Gati seeing some interesting buying today, so 2.5% up on that stock. NBCC, which is a bit of a perennial favorite with institutions as well as traders alike, that's another counter that's now moving to the highs of the day. Overall, mid-cap universe looking good with gains of 150 points on the mid-cap index. All right, one more stock that's really in focus today on the back of some positive commentary coming in from a big global brokerage is Future Consumer. Stocks up and about in double digits, and that's because Morgan Stanley is getting absolutely optimistic and upbeat. They've got a price target, Mangalam, of what, 95?
Absolutely.
And this is after such a huge run on the stock.
That's right.
So what's left to play here? What's MS saying?
MS, you have to give this to Morgan Stanley. They have got it right on future retail as well. When future retail was up about, what, 80%, they initiated coverage around March, and that stock has more than doubled from there as well. So this time, perhaps they believe there is more. In future consumer, it's more than tripled from the start of this year. They believe there is more 60% upside left. 95 rupees is their target. And they believe the company will be India's 5th largest FMCG company by FY21. And not just that, while doing that in revenues, they expect a margin expansion of close to 500 basis points as well. This will be led, of course, by scale-driven efficiencies, better fixed cost absorption as the company grows, and product mix improvement. A little about the company, it houses all the FMCG brands owned by the Future Group itself. So the brands like Golden Harvest, Sunkist, Active Plus, Tasty Treat, these are all the brands that the company holds. And in my opinion, I think that's the master stroke, having a brand which has nothing to do with the mother brand Future Group or the store that it sells in. Because, when a brand which is there and it has the in-house name itself, say for instance Marks & Spencer selling in a Marks & Spencer store, it limits the growth potential of the brand, and people perhaps believe that there is some sort of value, you can buy it at a discount given it's an in-house brand. So these are the big moves that the company is making. They have a food processing unit as well, and they had an FY17 revenue of 1600 crores. Morgan Stanley has tall growth targets. In the first half of FY18, the company has done close to 1400 crores in revenue. Morgan Stanley believes in all of FY18 they can do 2915 crore with 47 crores in EBITDA. Going forward, this 47 crores of EBITDA could become 160 crores in the next fiscal and 350 crores in FY20. 6,800 crores is what they're believing. But Kishore Biani to CNBC TV18 has said that Future Consumer could be at 20,000 crore revenue in FY21. That's something we have to watch out for. Valuations, they're very stretched, 61 times FY20 earnings, but that's the kind of market that we are in. So these are the things we have to watch out for, apart from the risks, of course, that they may depend only on the future retail expansion, organizational capacity. They haven't really had a brand which has successfully launched so far. And going forward, high working capital deployment. Let's see what happens.
Okay, well, there is plenty to contend with as far as Future Consumer goes. But that's not the only stock that we have our eye on. The next one is Jet Airways, and not such happy reasons for Jet because the company came out with numbers. It's anything but inspiring. And after that mega rally, if you can just get a one-year chart of Jet Airways to put things in context, this is a real dampener that's come through. Costs, Sonal, we were expecting Jet will start rationalizing those costs. Not happening in Q2?
Definitely, it did not happen in Q2, and I think that will start happening from FY19 only, as the company said it in the analyst meet. But if I take you to the fine print of the results, though the revenue were up around 3%, the EBITDA margins, that is the EBITDA before lease rentals, were down 30% and took a hit of around 700 basis points. That's quite a lot, and all this led to a profit decline of 91%. Now that's huge, and the other reason why this happened is because the other income fell by around 58%. Now talking about the cost, the fuel costs were up at around 16%, and other expenses also shot up by around 26%. The only good thing was that the finance costs were down 16%. Remember, even debt is a huge problem for Jet. Talking about the segments, the domestic business did really well. The revenues were up around 15%, but I think there's still some problem in the Gulf region because the demand didn't pick up and the international revenues came down by around 4%. And today they have a conference call, so the details on the yields, the available seat kilometers will be available on them, and I'll update you all on that.
All right, we'll focus on you to update us on all of that. But just watch out for Shilpa Medicare. There's some news coming in from agencies that the company's US FDA has given 10 observations to one of their Jharcherla unit or something. The stock has come off the low point of the day. But remember, ahead of this news piece or whatever it is, over the last 1 week, it has corrected about 6%. And this is news that we're getting from agencies, not from the exchanges or something. So we'll have to watch out for that, right?
Okay, not very pleasing observations from the FDA for sure, not document, follow quality testing norms. So we'll keep you updated.
Just watch out for the markets. Nifty 10,250 thereabouts at the high point of the day, and contributing to those gains are the big boys, HDFC as well as HDFC Bank, both of them at the high point of the day. So we'll watch out for that and what happens in the second half of trade. But let's move on to some important story in their investigation into how quarterly earnings of companies were leaked ahead of their earnings announcement on social media, WhatsApp. Both the stock exchanges as well as the regulator are now shifting their attention from who might be circulating to the information to the companies whose earnings were leaked. Yash has the details. Yash?
Well, this pertains to market regulator SEBI's ongoing investigation on complaints of some of the individuals circulating unpublished price-sensitive information of some of the listed companies, be it through WhatsApp, text messages or various other forms of social media. Intensifying the investigation there, what we're given to understand is that India's largest stock exchange, NSE, has made a list of some of the important listed companies where through its surveillance mechanism it has found that a lot of unpublished price-sensitive information has been doing the rounds of the market before it actually comes on the exchanges. I also asked my source on the names of these particular companies which form a part of this particular list, but he's refused to disclose the names. But what he said is that these are some of the important listed companies on both the exchanges. Now, going forward, NSE intends to submit this particular list with market regulator SEBI, and of course through a consultation process between both the parties, which is exchanges and market regulator SEBI, the exchanges want to mandate these companies to come out with a clarification on the exchanges whenever they come across any such unpublished price sensitive information which is being circulated in the market. And that is because NSE believes that a lot of these companies are aware of these activities happening, of these information which are related to the financials of the company being circulated before they actually come on the exchanges. We have written to the National Stock Exchange on this particular story, but we are yet to receive a reply from them.
Okay, all right, Yash, thank you very much for getting us the latest on that story. Well, we will have to take your leave. However, it's been a dream run for the Maruti stock, which crossed 9,000 today after hitting record highs yesterday as well. As we wrap up on the show, we will leave you with words coming in from one of the biggest market voices, Ramdev Agarwal of Motilal Oswal, on what he thinks can make Maruti tick from even here on. 9,000 and counting.
It's crossed SBI in market cap as we speak. So let's do that. Let's take the viewers' leave and watch out for what Ramdev Agarwal has to say on Maruti.
The concept of car which is 100 years old, is it going to be lasting for next 100 years? That you have to make a call. So once, if that is going to be so, I mean, the car is needed for the basic transportation of the masses. In that case, who is going to provide this car? India today does 3 million, China does 24 million. 10 years back, China was also doing 3 million. So I'm not saying that we'll do 24 million, but even if you do half of it, say 10, 12 million, who is going to provide that car? Today, out of 2 cars, 1 car is coming from Maruti. So you have to look at the industry structure. There is no rivalry. He is 51%. There is second guy is 15. There is no third. And this country needs so many millions of cars. What do you do? Then, so the industry structure has to be understood before passing a judgment.